Thinking about buying a new home, but you're not sure how much you can borrow? Or maybe you're ready to view properties, but you're worried about making a serious offer without a lender on board? Let's talk about a mortgage in principle. First and foremost, let's talk terminology. You might hear a mortgage in principle be called different things, such as mortgage in principle, decision in principle, or an agreement in principle. Confusing, right? Don't worry, they're all different names for the same thing. Essentially, it's referring to a document from the lender saying, based on what we know so far, we'd be willing to lend you this amount. So MIP, AIP and DIP, all the same concept, just different branding. So let's dig a little bit deeper into what a mortgage in principle actually is. So a mortgage in principle is effectively a statement from a lender following some basic checks saying how much that they'd be willing to lend you. It's really important to know that this isn't a mortgage offer. Think of it as a good indication of what you could borrow, but it's not guaranteed at this stage. Why is it important to get a mortgage in principle? Essentially, it's giving you a really good, realistic idea of what you can afford. This is based on a calculation regarding your current situation, outgoings and your income, which is really important to give you a benchmark figure for when you're going out and viewing your dream properties. A mortgage in principle also shows the estate agent that you're serious, and a lot of the time can put you ahead of people who haven't got one. You don't want to see the house of your dreams and then find out afterwards it's out with the borrowing a lender will give you. Let's talk about how to get a mortgage in principle and what information you might need at hand to get one. Obtaining a mortgage in principle can be really easy and can be done online, through a broker or over the phone with a lender. Each lender will be different, however, the following information may be requested. Your income details will be a big one that lenders ask about. They'll want to know how much you earn and how often this is paid. Your employment status as well. Lenders' criteria can be very dependent on your status of work. Your outgoings and financial history will also be a big one that lenders want to know about. Please have to hand any committed expenditure, so outstanding balances for credit cards, monthly payments towards loans, things like that. In order for you to get the most accurate mortgage in principle as possible, it's really important that the figures for your committed expenditure are correct. Make sure ahead of this that you've checked your figures are accurate, just so you're not underestimating or overestimating. Lenders will also want to know your 3 years address history, so make sure if you have lived at multiple addresses that you've got the dates from when you've moved in and moved out, as well as the full addresses including the postcode to hand. Some lenders may do a soft credit search. You don't have to provide full documents at this stage and you're not tied into anything. Think of it as a snapshot of your finances. If you're not sure how to complete a mortgage in principle, speaking directly to a lender or a mortgage broker can be really helpful. They're there to guide you through it. When is it best to get a mortgage in principle? Typically, we'd recommend getting a mortgage in principle before you start viewing properties. A lot of estate agents may require you to have one before you start viewing properties anyway. Some mortgage in principles last for 28 days, others 90 days. Does a mortgage in principle affect your credit score? Some lenders do a soft credit check, which won't affect your credit score. Others may do a hard credit check, which is often rare. However, if you are looking at getting multiple mortgage in principles, it is best to check directly with the lender what type of checks they're doing, so you know the impact it will have on your credit score. Once you've got your mortgage in principle, you're in a strong position to start viewing properties within your price range, making offers, and also start getting documents ready for your full mortgage application. Just to note again, a mortgage in principle isn't a guarantee and it's just a good indicator. You will still have to go through a full mortgage application, which will go through underwriting from the lender, including affordability checks, and also they will request to see various documents. This has been your crash course in getting a mortgage in principle. If you found this helpful, please like and share, and good luck with the home search.